Welcome to Explain the Charts. Today, August 7th, 2025, we're diving into an in-depth analysis of the USDJPY currency pair, combining both recent news and comprehensive chart data. Let's start by looking at the current macroeconomic landscape influencing USDJPY. Recent Google searches indicate that the USDJPY pair is currently trading around the 147.30 level, with UB analysts suggesting a likely range between 146.90 and 148.00. News highlights lower GDP expectations in Japan, which could pressure the yen, while Wall Street remains mixed and oil prices are declining for the sixth consecutive session, impacting broader sentiment. Interestingly, CNBC, a major financial news outlet, reports no recent news specific to this security, implying that current movements might be more technically driven or reacting to subtle shifts rather than sudden breaking announcements. The Japanese yen has been trading sideways this week as investors carefully weigh the Bank of Japan's monetary policy stance. This suggests a period of consolidation as the market awaits clearer signals from central banks. Now, let's turn our attention to the charts to see how these fundamental elements translate into price action. Looking at the daily chart, we can observe the long-term trends and significant reversals. Notice the strong uptrend that persisted for much of 2024, pushing USDJPY to multi-year highs. However, we've seen notable pullbacks and interventions that have dramatically shifted the landscape. For instance, if we zoom in on the period from April to May 2025, you can see significant volatility. There was a sharp drop around April 10th, from roughly 147.45 to 143.70, followed by a further decline to a low of 140.47 around April 21st. This kind of abrupt movement often correlates with market speculation or actual intervention related to the Bank of Japan's policy, reflecting a strong pushback against yen weakness. Following this sharp decline, there was a strong bullish reversal, with price rebounding significantly to reach highs around 148.64 by May 12th. This indicates that while bearish pressures can emerge suddenly, there is still underlying demand for the pair at lower levels, likely driven by interest rate differentials or broader dollar strength. This recent history of sharp moves and rebounds suggests that strong support levels are crucial to watch. Zooming out again to the full daily chart, current price action for USDJPY has been more contained. We're seeing a more recent descent from highs near 150.8 in late July 2025, down to the current zone around 147.197. This confirms the broader sentiment of the yen trading sideways this week, as mentioned in the news. The daily chart highlights critical long-term resistance around the 150.00 psychological level, and stronger resistance at prior highs near 153.00 and 158.00. On the support side, the recent low of 140.47 stands out as a major historical support, with immediate support levels forming around 146.00 and the 143.00 mark. Let's move to the hourly chart to examine the medium-term picture and recent price structure more closely. On the 1-hour chart, covering July 18th to July 23rd, 2025, we see the more granular details of the recent trading range. The pair experienced a gradual decline from around 148.8 in mid-July down to the 146.2 level by July 23rd. This confirms the weakening momentum after the May rebound we saw on the daily chart. Hourly support is currently establishing around 146.2 to 146.5, with resistance around 147.5 to 148.0. The price action appears choppy, indicative of a market lacking strong conviction in either direction in the short term, aligning with the news of sideways trading. The higher trading volume seen during the sharp drops on the daily chart hints at strong selling pressure or intervention, while the hourly chart shows more balanced volume during consolidation. Now, let's analyze the 15-minute chart, which gives us the most immediate view of price action up to August 6, 2025. This short-term time frame shows very tight consolidation within a narrow band, largely between 147.00 and 147.80, and even tighter around 147.10 to 147.60 recently. This closely matches UB's forecasted range of 146.90 to 148.00. For short-term traders, this means volatility is present within a defined range, making breakout or range-bound strategies applicable. Immediate intraday support can be identified near 147.00, while resistance is near 147.60. A break above or below these immediate levels on higher volume would signal a potential short-term directional bias. So, what does this all mean for USDJPY's outlook? For short-term bullish sentiment to materialize, we would need to see a decisive break and hold above the 148.00 level. This would indicate a potential retest of the 150.00 psychological resistance. Reasons to be short-term bullish could include unexpectedly strong U.S. economic data or continued dovish signals from the Bank of Japan, reinforced by further lower Japanese GDP expectations. Conversely, for short-term bearishness, a clear break below the 146.90 support would be key. This could open the path towards 146.00 and potentially the 143.00 levels we've seen tested previously. Bearish triggers would likely be a hawkish shift from the BOJ, official intervention, or weakness in the US dollar tied to global risk-off sentiment. Long-term, the overall trend remains susceptible to significant policy divergence. The repeated sharp corrections on the daily chart illustrate the willingness of market participants and potentially authorities to cap excessive USDJPY strength. Recapping the important price levels to watch. Immediate support is at 146.90, with stronger support at 146.00, and then the significant historical low around 140.47. Immediate resistance is at 148.00, followed by psychological resistance at 150.00, and major overhead resistance levels at 153.00 and 158.00. Our unbiased prediction for the short term is that USDJPY will likely remain range-bound between 146.90 and 148.00, with a 70% likelihood, given the recent sideways movement and UB's forecast. This would be reinforced by no major economic surprises or central bank announcements. A breakout above 148.00 has a 60% likelihood if U.S. economic data surprises positively or if Japan's economic outlook continues to deteriorate without immediate BOJ action. This could target 150.00 within the next few weeks. A breakdown below 146.90 has a 55% likelihood if there are rumors of BOJ intervention or if global risk aversion leads to a flight to safety into the yen, potentially reaching 146.00. Key upcoming events to watch for include any statements from the Bank of Japan regarding their monetary policy and significant U.S. employment or inflation data. These events will be crucial in determining whether the current consolidation breaks into a new directional trend. Thank you for watching this in-depth analysis on Explain the Charts. Be sure to subscribe for more market insights.